Welcome to Module 5, the third and final module, which will involve a review of an important IFRS standard. Now, we will discuss another type of asset in Module 5, but finally, we will discuss a similar type of liability too. What type of asset and liability will we address? Well, we will be talking about contingencies, or to put it differently, contingent assets and contingent liabilities. And in reference to contingent liabilities, we will discuss whether or not we should make a provision for, meaning an accounting for it in our accounting records. So, what is a contingency? When are they contingent assets? When are they contingent liabilities? And when do we provide for them, make a provision for them, record them in our financial statements? Those are the topics of today's or this week's module. Now, you will be introduced once again to many concepts that have their foundations in economics and the law. For instance, when you look at a potential liability, you will ask yourself, do I have a legal obligation to pay this? Or do I have a constructive obligation to pay this? If there seems to be a legal or constructive obligation, do I know for sure the settlement date and the payment amount? In other words, what I owe and when I owe it. For liabilities and for assets, do I have the ability to measure what cash will be paid, in other words, the cash outflow, or what cash will be received, in other words, the cash inflow in the future? Indeed, these are the types of economic and legal questions which impact the accounting for contingencies and which further illustrate why accounting itself is closely related to economics, law, finance, and other business disciplines. This week, this module concludes our review of the IFRS standards. When you come back next week, we will review other international accounting standards that complement the IFRS system.